I'm Ran, co-founder of Orderly Network. Great to be here. Talking about exchanges. So by a show of hands, how many of you have used a centralized exchange? Okay. How many of you have used a decentralized exchange? That's actually a pretty good ratio of centralized versus decentralized. It's higher than I expected. I think most people have used a centralized exchange if you're sitting at this conference. And we're very aware of some of the issues with centralized exchanges. Not your keys, not your crypto. Obviously, what happened with FTX and other centralized entities, you have no idea kind of where the money sits, where the assets sit, because it's commingled accounts in pools in their cold wallets. So there's a lack of transparency around that, right? It's kind of similar to TradFi institutions and what happened during financial crisis, where over leverage, misappropriation of balance sheet can lead to users failing to redeem their assets. Running a centralized exchange is actually essentially a Web2 company. Binance, 5,000 people, centralized exchanges, over 1,000 people, very high operating costs. And again, like a Web2 company, there's actually a minimal use of blockchains. It's used as store of assets mostly, and not really on the smart contract level. But centralized exchanges, we're all using them, right? And why is that? Because it's easy to use. It's very intuitive, it's easy to use. It has a full spectrum of products. It's highly performant. Now it has the best liquidity for spot and for perps. Binance is still 50% of the world's market share in terms of exchanges. And the trading costs are not high. It's relatively low for traders. And then we talk about DEXes, right? So DEXes are, for those who have used it, they're not user-friendly, right? Compared to centralized exchanges, there's too many clicks. The onboarding through MetaMask or another wallet, you're messing around with chains, you have to access bridges, you're perhaps using wrapped assets, which has new levels of risks. So the whole experience is not great. The trading costs can be high. If you're executing a trade on Uniswap versus on Binance or on a perps protocol, the chances are that you're paying higher trading costs, higher slippage, and even gas costs, right? So this is not on centralized exchanges. So the costs are kind of high. Price discovery is slow because most of the liquidity is still on centralized exchanges. So when you're trading on DEXs, the price discovery is not there. And also fragmented liquidity. Now there's so many layer 1s and a ton of layer 2s on EVM that the liquidity is actually fragmented. If you take Uniswap on Arbitrum versus Uniswap on Polygon, they're actually two separate products, right? The liquidity is separated, the branding is the same, but the UX and the liquidity for the same asset can be entirely different. But then why do we bother using DeFi, right? Because of this belief that one day we're going to have the whole financial system on the blockchain. It's truly transparent, right? There's no misappropriation of assets. When we had the whole 3AC crisis, the lunar crisis, where assets fell a ton, protocols like Aave still held its own, and the community can see everything happening and they can jump into support. It's permissionless, right? So we have permissionless listing of assets, permissionless liquidity provision that happens on Uniswap and other protocols that allow pretty much anyone to list anything in the spot world. It's interoperable, right? Given everything is open source, it's very easily interoperable, though not so much across blockchains yet, but on a single chain, highly interoperable. And of course, decentralized. Decentralized, not just on the technology level, but also on the governance and the value capture. I mean, the whole ethos of Web3 is that us as users can all be stakeholders. We have the token, we should get value capture, we should get voting rights, and we're not just users like we are on centralized exchanges. So what I think will be the future of DEXs, which I think will just be exchanges in general and not just DEXs, is that anyone should be able to trade anything from anywhere. extremely frictionless onboarding access to any asset for anyone in the world. I think that's where exchanges are going, and from any platform, right? So, what does that actually look like, right? I think currently for decentralized trading, the liquidity is fragmented. Again, as we said, Uniswap on Arbitrum is different to Uniswap on Polygon. The liquidity is not combined. But that shouldn't be the case, right? There should be an omni-chain experience with unified liquidity across blockchains. It doesn't matter if it's layer 1, it doesn't matter if it's layer 2, it doesn't matter if it's layer 3. The liquidity should be aggregated, right? I mean, this is a very intuitive concept, just given the interoperability of DeFi. By the fact that it's easier to aggregate liquidity in DeFi, but currently it's difficult across blockchains. But I think it should be shared, right? It should be fully transparent, as we all know, and avoid any of the FTX scenarios that we've seen in the past. It should be great UX. So in the future of exchanges, decentralized exchanges should have the same, if not better, UX as centralized exchanges. We're talking about biometrics, fiat on-ramps, no interactions with chains. Chains should be abstracted away. Users should be dealing with non-wrapped assets, should be dealing with the native assets, right? Either as collateral for perps or spot trading. The experience should be the same, if not better, than centralized exchanges. I think that's when DeFi will actually get more massive adoption. But at the same time, it should retain the permissionlessness of DeFi, right? For long-tail assets, meaning that anyone should be able to list any asset, provided some threshold of liquidity. And anyone should be able to partake in that process. Liquidity provision, liquidations, anything. Now the process, I don't know, how many project founders or teams are out there, but the process of listing an asset on the spot and perpetuals, the process of listing on centralized exchanges is very difficult, tedious. It's kind of a black box. It's not a fun process to be in. We've launched a token recently, so we just went through that process. But it shouldn't be that way, right? It should be permissionless listings on some sort of a tool that still allows you to attract liquidity and to attract participation from the community and to even solicit the community for marketing needs and such for a new asset. And that everything should be on one platform. Not just crypto assets, but RWAs like commodities, FX, potentially stocks, prediction markets should all be on one asset, right? You just need liquidity participation from all parties. You need oracles for perpetuals, but all the assets should be on one platform, ideally, at least on the liquidity layer, and then so anyone can trade anything from anywhere. There's no reason for it to be fully segregated, and that goes into the dream of how traditional assets, TradFi assets, can fully be migrated on chain to trade, via perpetuals, via spot, everything. And it's still seamlessly interoperable, right? That's one of the beauties of DeFi. So you can have, people on the top layer who are creating front ends, the 1inches of the world, the matchas of the world, that have great UX for the users, and they're aggregating all types of liquidity in perpetuals, in spot, for any asset. And then I think you should be able to also create your own front end or your own product in a matter of minutes, right? So now, we're going to the large exchanges to access their services. And a lot of times, the people who have the users and who have the traffic really want to create their own thing. It should be catered. It should be custom front ends for whichever geography, whichever type of users. We don't believe in the one-size-fits-all type of product in terms of trading, and as we've seen this in traditional assets, whereas like the Robinhoods of the world are catering to retail traders, and that's very different than the interactive brokers catering to professional traders and the investment banks that cater to institutions, right? These are different types of requirements in terms of compliance, UX, liquidity, product set, and they need to be different products. So we see a world in where all types of interesting exchanges are launched with this type of infrastructure to service their specific target audience. So again, I think this is kind of the elements that's needed for anyone to trade anything from anywhere. Fully accessible to anyone through any interface, great liquidity, permissionless listings. So I mean, this is essentially what we're doing at Orderly. We're trying to make this happen. We think to do this, I mean, this is kind of the dream of DeFi and the holy grail, and we're trying to make this happen. So I mean, what have we done now? We have an omni-chain order book, so chain abstracted across different blockchains, across 7 different blockchains, going to be 8 by early next month. We have unified liquidity across the blockchain, so not fragmented. Low cost trading, it's similar to centralized exchanges. And then anyone can create a DEX. There's about 20 plus DEXes launched on top of Orderly. Some are AMM Spot that created a DEX product. Some are wallets, some are custodians, some are social apps that have launched. And we have over 55 perpetuals markets listed already. And what's coming next? We want to enable permissionless listings, right? So then self-service listings. If you're a project, if you're a meme coin, if you want to list some interesting prediction market, we want to be able to do that. We want you to be able to do that effectively and very fast on perpetuals. So adding a certain amount of liquidity and meeting certain criteria, it should go live. And then all of our different front ends, 20 plus front ends, will potentially list it as well. Also permissionless liquidity provision, liquidations. So again, having users to be able to partake in all aspects of the exchange infrastructure and to provide liquidity. And lastly, institutional friendly in terms of where assets are custodied, how they're settled, and compliance. So this is what's coming. So this is some stats about what we've done. Currently, up to date, since last November, we've processed over $82 billion now in total volumes. We have on our own Orderly chain. So that's all the volumes of combined volumes of all the perps traded across our 20 plus different front ends. These are some of our social stats. Feel free to please join our Discord, give us a follow on Twitter, send me a DM. Happy to have you in our community. It's a bit about our ecosystem. We're fortunate to have some of the best in this space be our backers, whether it's VCs like Pantera, Dragonfly, traders like Jump, GSR, or builders, Laser Digital, who is a crypto arm of Nomura Securities, and a bunch of these are actually the protocols that have integrated Orderly perps, and these are already live. Everything's already live. So then, if you're interested in trying out kind of the product, all these, again, the idea is anyone can trade anything from anywhere. So this is kind of where the anywhere lies. These are some of the front ends that are built on Orderly, and these are all omni-chain DEXs, which are live on 7 different chains, going to be 8. So it's an omni-chain experience right off the bat. And this is some of our socials. Thank you for having me. We look forward to building the future of trading and exchanges together. Thank you.